China's real estate market is in big trouble. The signs are everywhere, and they are impossible to ignore. You can see it everywhere, from half-built skyscrapers that stand as silent monuments to halted progress, to something really strange, developers letting people pay for apartments with crops. Yes, you heard that right, crops. Imagine trading your wheat for the keys to a new home. It sounds like something from the past, but it's happening now in the world's second biggest economy. This isn't just a quirky anecdote, it's a symptom of a much deeper crisis. This shows how bad things are in China's real estate business, which has been a huge part of its growth for a long time. The real estate sector has been a cornerstone of China's rapid economic expansion, driving not just construction but also related industries. Taking wheat, garlic and other crops as payment is a last resort for developers who are struggling. These developers are desperate, and this unconventional method of payment highlights the severity of the situation. They're dealing with fewer people wanting to buy homes, lots of unsold apartments, and running out of money. The market is saturated with empty apartments, and the demand has plummeted. This is a big deal because real estate is connected to other industries like construction, finance, and manufacturing. When the real estate sector suffers, it sends shockwaves through the entire economy. The problems are spreading throughout China's economy, and people are worried about what it means for the rest of the world. The uncertainty is palpable, and the global markets are watching closely. This situation shows how shaky China's growth has been, relying too much on real estate investment. The over-reliance on real estate has created a fragile economic structure. For years, owning property was seen as a way to get rich, leading to a building boom and super high prices. The belief that property ownership was a guaranteed path to wealth fueled speculative investments and inflated prices. But this bubble has popped, leaving behind unpaid debts, unfinished buildings, and lots of uncertainty about China's economic future. The aftermath of this burst bubble is a landscape littered with financial ruin and a clouded economic horizon. All over China, there are empty cities, often referred to as ghost cities. These ghost cities, with their vacant apartments, empty malls, and deserted streets, aren't the result of a natural disaster or war, but of over-ambitious building projects and risky investments. They are a testament to how fast China's economy grew, showcasing the country's rapid urbanization and industrialization. However, they also highlight the significant problems that can arise from unchecked development. These cities were built with the expectation that millions of people would move in from the countryside, seeking better opportunities and a higher standard of living. But that hasn't happened as much as they thought. The anticipated influx of residents did not materialize, leaving these urban areas eerily empty. City life isn't as appealing anymore, especially for young people who can't afford homes and can't find jobs. The high cost of living and lack of employment opportunities have deterred many from moving to these new cities. The result is an oversupply of homes, with millions of apartments sitting empty. These vacant buildings stand as silent monuments to misplaced optimism and poor planning. These ghost cities have a significant impact on the real estate market and the broader economy. The oversupply of housing has led to falling property prices and financial instability. The empty buildings represent wasted money, with billions of dollars tied up in assets that aren't being used. This misallocation of resources is a major economic issue. This misallocation of resources hurts the economy and can cause financial problems. The construction boom, driven by speculative investments, has led to a glut of unoccupied properties. Ghost cities teach us about the dangers of building too much and the importance of planning cities carefully. They serve as a cautionary tale for other rapidly developing nations, emphasizing the need for sustainable and well-thought-out urban planning. People around the world have always been skeptical of China's official economic numbers, questioning their accuracy and reliability. This skepticism isn't just a recent phenomenon. It has been a topic of debate for many years. The real estate problems in China make this skepticism even worse. The sight of abandoned or unfinished buildings and construction cranes standing idle paints a grim picture of the sector. The government maintains that the economy is still growing at a healthy rate, but many experts disagree. They believe the real numbers are much lower, indicating a far more troubling economic situation than what is officially reported. This discrepancy between the government's reports and the actual situation on the ground leads many to question the accuracy of China's economic data. People wonder if the government is being entirely honest about the state of the economy. This suspicion isn't new. Critics argue that the government has a history of manipulating economic data to present a more favorable image. Historical footage and archived press conferences reveal a pattern of altering figures to make things look better than they are. Local officials are often under immense pressure to meet growth targets set by the central government. To avoid repercussions, they sometimes inflate their numbers, which in turn skews the national figures, making them unreliable. The lack of transparency and independent verification makes it difficult to ascertain the true state of the economy. Journalists and researchers often face obstacles in accessing accurate information, further complicating the issue. However, certain indicators, like the real estate slump, are hard to ignore. The sight of empty or sparsely populated apartment complexes and unfinished buildings with real estate signs is telling. Additionally, fewer things being made in factories is another red flag. Factories with inactive machinery and workers standing idle suggest a slowdown in industrial activity. Consumer behavior also reflects economic troubles. Empty shopping malls and streets with few shoppers indicate that people are not spending as much money as they used to. These signs collectively suggest that the official numbers might be overly optimistic. People looking at their phones or computers with concerned expressions and storefronts with little customer activity add to the growing doubts. This lack of clear and reliable information makes it challenging for investors and governments to make informed decisions. The uncertainty surrounding China's economic data could exacerbate a slowdown, not just for China, but for the global economy as well. In this part, we're looking at how data can be tricky. We often think of data as facts, but it can be changed to tell different stories. This is where the real power of data is. By understanding how data can be manipulated, we can see both its good and bad sides. So let's explore this together. Now, let's talk about how more people are sharing their opinions. With the internet, more and more people are finding ways to speak up. These voices aren't connected to the usual news companies, so we hear many different viewpoints. It's amazing how technology lets people share their stories and ideas. This is changing how we get information. So, let's see how these new voices are making a difference. Pictures from satellites are really helpful for understanding how cities grow. By looking at these images, we can see how cities expand, how infrastructure develops, and even how construction affects the environment. It's really interesting how these pictures can reveal hidden things about our cities. In many places, local governments set big goals for economic growth. They offer rewards to attract businesses and investments, but the pressure to meet these goals can sometimes cause problems like too much building and financial strain. The giant real estate company Evergrande has been having a lot of trouble. With huge debts and unfinished projects, the company is trying not to go bankrupt. Evergrande's problems show the dangers of growing too fast and borrowing too much money in the property market. Governments can help the economy during tough times, but there's only so much they can do. Relying too much on government help can create problems in the market and make it hard to grow in the long run. It's important to balance government help with letting the market do its thing for a healthy economy.